Distinguish between debt distress and debt conversion. So we put it down on the board. That is B. Distinguish debt distress and debt conversion. Distinguish debt distress and debt conversion. Distinguish the debt distress and debt conversion. One of the things that comes to our mind is when you talk about debt, we need to understand that being in a developing country, and Kenya one of the developing countries in Africa, we need to understand that one of the major policy issues is management of debt. Because you realize that these countries are not able to fund their budget, that most of their budgets are funded through debt. And so therefore, then there's need for proper debt management in such countries. And some of the terminologies when you talk about a numbers of issues pertaining to debt, we'll have what we call debt distress, and we have what we call debt conversion. To be precise, when you talk about debt distress, is inability of a country when a country is unable to fulfill its financial obligation. That is the debt distress. When a country gets to a point that is not able to fulfill its financial obligation as a result of the debt, that is what we call debt distress. And debt distress basically will lead to what we call debt restructuring, that you need to restructure the debt as a result of the distress that comes as a result of not being able to fulfill financial obligation. On the other hand, when you talk about debt conversion, we are basically saying that conversion of a short-term loan to long-term loan and vice versa, where we typically exchange debt at sustainable discount. Exchange the debt at a sustainable discount. We can put it down and say debt distress. We say that debt distress is inability, is a country inability to fulfill the financial obligation. That is what we call a debt distress. And debt restructuring, and therefore debt restructuring is required. And therefore debt restructuring is required. You get to a scenario where you are so much faced with the debts that you are not able to fulfill your financial obligation. And therefore what we call the restructuring of debt basically will be necessary in such circumstances. Then we proceed to what we call debt conversion. Debt conversion. What we call the debt conversion. So when you talk about debt conversion, we basically say refers to the conversion of short-term debt to long-term debt, conversion of short-term debt to long-term debt, and vice versa. Conversion of the short-term debt to the long-term debt, and vice versa. Or we can basically say that exchange of debt, what we call exchange or stock exchange of the debt. We say stock exchange of the debt, typically to a sustainable discount. Typically to a sustainable discount. That is what we call a debt conversion. That is what basically we call a debt conversion. And very important to understand again on these very questions that we have, very important to understand is that if the marks is allocated 4, it therefore implies that once you define the debt distress, that should account for 2 marks, and debt conversion 2 should also account for the 2 marks. That should also account for the 2 marks. And that's a question that is doable and manageable. And if you look at this, this is one of the areas that actually affect, is one of the emerging issues, especially to the developing countries, and is one of the areas that learners need to pay attention. Because if you look at these countries that are developing, Africa and having a majority of the countries that are developing, they're faced with a number of debt issues. And so we need to give much attention to that. That is how we approach that very question.